Hello, everyone. We're super excited to be here today to talk about tokenizations and real-world assets. My name is Vanessa Gourlay. I'm the managing partner at Arch Capital, an early-stage venture fund. And we are going to talk about the opportunities around RWAs and demystify sort of the concept and what we can do here. So I'll start by letting our great panelists introduce themselves briefly, and then we'll get into the discussion.
So it's very nice to meet you. My name is Jong-gun. I often go by Jerome. I am co-founder of Jube, which is a service we are doing in Indonesia for small or medium-sized of the merchants. We are a company of Web 2.5, so we are leveraging to both sides, 2.0 and 3.0. For the 2.0, we are helping small or medium-sized of the merchants for helping them to find the quality of workers. And Web 3 side, we are providing the liquidity from the Web 3, and we are utilizing the technology, the advancements for tokenization and the transparency. Thank you.
Hey everyone, this is Steve from Neoclassic Capital. We are a crypto investment firm based in US, Miami Beach. We started this year, we investing into early stage startups in blockchain and digital asset space. I was in crypto since 2018, and before that, I worked at the Goldman Sachs for 10 years in Tokyo and Singapore.
Hey everyone, my name is John Patrick Mullen, CEO and co-founder of Mantra. We are a purpose-built layer 1 blockchain focused on real-world asset tokenization, backed by Sharuk Partners, Laser Digital, and Brevin Howard.
Great. So I'm going to start with John and ask, John, how would you describe the real-world asset opportunity, and what do we really mean by real-world asset? I know that the crypto industry likes to use acronyms that no one understands because it seems to me it's just assets. So could you explain what's the opportunity here and how you guys see it? And then we'll take it to the other panelists.
Absolutely. So I think a bit of a loaded question. Real-world assets, RWAs, obviously that's a narrative that we focus on. But frankly, as an acronym, it's pretty poor. In the traditional sense, real-world asset or RWA means something very different, risk-weighted assets, so a little bit confusing. But I think really what we're trying to do as an industry is bring different types of products, different types of assets on-chain so they can be you have the potential to be more liquid, you have the potential to be accessible by a new capital pool, as well as being more programmable and more composable within different financial primitives. So these are some of the things that we're focusing on by building a layer 1 blockchain that supports asset tokenization for easily managing, distributing, and compliantly issuing real-world assets on-chain. The idea about everything can be tokenized is true. That doesn't necessarily mean that everything should be tokenized. And I think it really boils down to, one, are you actually creating value for the issuer of the asset? Are you creating value for the purchaser of that asset? And are you able to do it in a compliant manner? So I think these are some of the challenges that we're facing day in and day out. A lot of supply side, not as much demand side. So we're working on that, and I'm sure we'll talk about distribution as one of the key challenges we're seeing today.
And what are the key use cases or the largest assets that we want to see tokenized and traded? And maybe Stephen also.
Yeah. I will categorize the type of assets that goes on-chain in two categories. One is traditional financial instruments like bonds, private credit, real estate, etc. The other category is those non-financial instruments, which can be art, it could be IP, it could be collectible, and such and such. So at the moment, the market is about, except the stablecoin, some people define as a real-world asset, but excluding stablecoin, which is about $200 billion market, at the moment, about 10 billion is under private credit, and 2 billion is a treasury. So that's a kind of a main asset class that we see on RWA. But as a venture capitalist, we are looking forward to new type of assets that is not tradable on the Web 2 world, that has a financial value that goes on-chain. That's something that we are looking forward to.
I might want to add something real quick on that, though. Steve was talking about tokenizing assets on public permissionless blockchains, and I think we have barely scratched the surface of actually bringing assets on-chain. Steve was mentioning it's only a few $1 billion. Obviously, we're exploring this multi-trillion-dollar opportunity. So on a retail, public, permissionless blockchain side of things, we haven't really achieved real product market fit yet. But institutionally, and on permission private blockchains, I think it's arguable to say that there's significant product market fit. JP Morgan, I think now their blockchain's called Kinetics or something, but it was called Onyx, and I think they have done over $1 trillion of tokenized assets on their chain in just a year. So that's a significant scale difference to what we're playing at today.
Jonggung, any other assets that you guys are focusing on?
Right. I think for the past month and years, we've been observing a lot of the progress related to RWA or tokenization in institutional level. But we do think still a lot of the opportunities and a lot of the big things will coming throughout the private credit areas. And for instance, as a single country in Indonesia, around the 60% of the GDP was created by the small or medium size of the merchants. Actually, looking at the supply and demands, actually the supply is less than 50% of what the merchants need from the capital markets. So what we are trying to bring is Web3 liquidity and their technologies to provide the liquidities to Web2 merchants to boost up the economy in a developing country.
Awesome. So let's dive into what John was saying about the type of blockchains that people use to do real-world asset, because I think that's really, we're at a turning point. I'm on the board of the Enterprise Ethereum Alliance, and JP Morgan is on the board too. And as John mentioned, they are tokenizing on private blockchains a lot of assets. But at the end of the day, we end up with the same siloed IT infrastructure that we previously had. So JP Morgan is dealing with their JP Morgan clients and products, and then other banks are doing the same thing. With the opportunity with public blockchains is that we can have an interoperable layer where everyone trades and exchange, and that hopefully increases liquidity. So what's your approach? I know you have a public blockchain. What is the reception of your clients, and how are they thinking about the legal challenges or other challenges working on public blockchains?
Sure. I think frankly for me, I wouldn't want to be building a private blockchain. It would just be very boring. And again, like you said, just recreating existing financial silos that we're trying to break down. So we very purposely built a permissionless blockchain that has a permission layer to it. So you're not saying, hey, we don't care about AML, we don't care about KYC, but you do have to reduce the friction of allowing people who are currently the on-chain active users, crypto native people, to be able to actually interact with these new types of financial assets on-chain or new types of tokenized assets on-chain. So we've effectively created this permissionless blockchain that's interoperable with other blockchain networks. We are built on top of the Cosmos SDK, but you could interact with Ethereum or Solana or what so have you. But it has a very special kind of area where you issue these assets from, effectively like a walled garden permission layer. And I think it's really important to have an understanding of the provenance of the asset. Frankly speaking, the technology itself is not that hard. It's actually more about that linkage between the real world and frankly, the distribution. How do you actually bring these things on chain that people actually want to buy and not just creating a token for the sake of creating a token? So technologically wise, I do feel like it's already becoming highly commoditized. And even when we talk to tokenization platforms or asset issuers, I will even though I'm building my own chain, I will tell them you should be multi-chain irrespective. Go where the liquidity is, go where the DeFi ecosystem is, and you shouldn't be beholden to an addressable market that's only the size of one particular blockchain network. It obviously should be much bigger.
If I add on it, so I think in current RWA space, some people ask the question, okay, you can buy the treasury, why you should be on chain? You can buy the real estate, why you should be on chain? So to that question, this is very important piece that we constantly think about. What can go beyond what we have at the moment in RWA? So what I'm trying to say is on blockchain, why blockchain is great is the composability and the interoperability. So whether these two features can be embedded in this RWA space, then we can enjoy some features that you don't, that RWA that not using blockchain. For example, if the tokenized real-world asset, let's say treasury token, then if this treasury token can be embedded with the composability with some other DeFi projects, you can use your US Treasury token, pocket it into DeFi projects as a collateral, and then you can use many DeFi kind of features such as lending and etc. So I think it's very important going forward that many, as John mentioned, there are going to be a lot of infrastructure helping issuance of RWA or the maybe trading secondary market, etc. But if we want to make this RWA space in blockchain meaningful, I think a lot of developers and builders should embed this composability function of blockchain into the space.
Right. If I add one, over the course of years, we've been, seeing a lot of technological advance. The speed or gas price or interoperability of cross-network. Even though some may say that's not enough, but we have the tools. But the thing is, at the end of the day, the people wanted to see is how much financial gain I can get out of the platform or the services. And I do believe, of course, the technological advance and progress need to be made, but importantly, in parallel, we need to see and feel the people's how the value of those RWA or tokenizations.
That's a great comment. I mean, tokenization and RWA is nothing new. Since 2016, we've been at it, trying to create these tokenization platforms. Now we call them real-world assets. And at the beginning, I think the major business issue was what's the added value of tokenization, and also, is there enhanced liquidity once you tokenize, and is there a marketplace where people can trade? So has that changed since then? Do we see more of these marketplaces? Do we see more opportunities? Are illiquid assets that are being tokenized going to become all of a sudden more liquid? What's the value prop here?
I think a secondary market is definitely, we need something on RWA, but I think still we are at the stage where a primary market should be established more nicely before we're talking about secondary markets. So to do that, I always consider two things. We, like people like us, should keep educate these traditional folks so that they are happy to put their asset on-chain. The second is, I think for the quality content, quality IP, or quality assets to be on-chain. Otherwise, I don't think there will be demand created to even before talking about secondary markets.
I agree with that. I mean, I think back in the day, people would create, low quality assets, shitty assets, and put them in token form and expect them to be, amazing overnight. But it doesn't really work like that. The idea of a secondary market is something that's been obviously one of the holy grails of crypto or digital assets in general, and it's still not here, honestly. We are actively looking at building that, and I think one of the kind of differentiators for us is we heavily focus on compliance and regulation. We're in the process of finalizing our licensing with VARA in Dubai, and are in conversation with ADGM here about how we can actively have an on-chain liquid market for these type of assets. And I think, frankly speaking, it's going to be from the UAE where this starts, where this happens, because of the progressive regulatory framework, because of the support from the top down. So I'm very bullish on the opportunity here. But you have to think about this. It is a asset class by asset class, jurisdiction by jurisdiction problem. And many instances, these things are securities. So how does that work on a global scale? And we have to almost take this approach of like, this is the asset, here's the people who can interact with it, that we feel comfortable with the risk because we either are licensed or there's a clear framework. But there's a lot of places around the world where there's no clear framework, and obviously the promise of a permissionless open blockchain is that anyone can interact with it, right? So again, I think that's why it's quite important to have that kind of layer of provenance where people can come back to redeem from the source. Because in the end of the day, it's not that hard to create a digital representation of something in tokenized form, but to actually have the real value, economic value pass through, that's a different story.
So just to add on it, I think since John mentioned regulation, the way that I look at it is the risk in RWA space is this part. A lot of RWA projects or companies, they don't even think about underwriting. They don't think about issuance. They don't think about how they want to custody across the border. To me is US got hit by FTX, Singapore got hit by FTX, and South Korea hit by Terra. And then maybe UAE, they are doing more think tank kind of approach, and then Europe is a MiCA guideline is pretty well established. So understanding this different dynamic on different culture, different jurisdiction, I think a lot of RWA companies are missing that. I think John is doing a great job around it, but that is very important that as I mentioned, to make this RWA blockchain meaningful, you have to really work with the interoperability and the composability. To do that, you have to really dig down to underwriting and KYC AML layer on top of these RWA assets to be more controlled and well established.
Well, I echo both of gentlemen's, and just one more thing, regulations or the legal specs need to be so complied and prepared in parallel. Probably, one of the art of the blockchain is anyone can make their own things. We have a lot of variations. There's still in the tokenizations or RWA areas, we see a lot of variations. That's good things, try out, and then the try and the fail and make the successful. But at the same time, I wanted to see some kind of the mainstream movements to make kind of the common grounds or common tools. Everybody understands how this works and how we can make a little bit bigger or replicated use cases across the countries.
And talking about use cases, what do you guys think is the most successful use case for tokenization today? But how do you see it in 5 years' time and further down the line? What's your grand vision for everything will be tokenized?
So to Steve's point earlier, the most successful use case of tokenization so far has clearly been tokenizing fiat, so stablecoins. Obviously, I don't think that's as exciting personally for myself. It's obviously massive opportunity. But today there hasn't really been that much else, at least on these public permissionless blockchains, other than treasuries, and I think Provenance, which is another layer 1 blockchain, has done a lot of work with HELOCs in the United States, so home equity loans. Personally, we focus on 3 primary asset classes: real estate, and real estate primarily in the UAE. We look at financial products, so private credit, money markets, private equity, venture capital, all different types of fund structures, and IP. And frankly speaking, the reason that we're focusing on these 3 areas is just because people are already buying these types of things, primarily in the real world, particularly at an institutional level. And it's not as hard of a sell. Selling the idea of buying watches or cars, luxury cars or wine or whiskey, that's a little bit more of a niche market, and frankly speaking, that's not where the liquidity is going to come from. I use the example like, I can do a deal with a real estate developer here and do $1 billion like that. How many tokenized Rolexes am I going to have to tokenize to get $1 billion of watches on chain? A lot. So when we're talking about this massive $1 trillion opportunity, you got to start where the dollars make sense, and those are the assets that we look at. And I think it will be driven again jurisdictionally. So the UAE will be the home of tokenized real estate, in my opinion. I think the US is going to drive a lot of the funds.
You heard it here first.
For me, I will retweet a little bit of questions. So how I view this, what the type of stuff that we're going to see more popular in RWA space. As John mentioned, the first thing is something that I'm not too excited, but I think undeniably, I think traditional instrument going on chain will be still major dominant forces of RWA. As I mentioned, at the moment, RWA space, majority is a private credit and a little bit of a treasury. I think it's going to be similar movement, as John mentioned, private equity fund or venture capital fund like a KKR did. It so makes sense that people want to own the fractional share, which they can at the moment. So I think this traditional financial assets going to RWA is going to be still dominant market. However, the second point I want to make is public securities, and then which, one of the key strengths of this RWA is a third country, for example, someone in Africa can trade Apple stock, which they cannot at the moment. But if Apple stock become a RWA, anyone around the world who has a MetaMask, which is crypto wallet, can trade these public securities. So I think public securities is kind of natural kind of next area. And also, as I mentioned, if you have an Apple stock, let's say I have a tokenized Apple stock, John has, we had a dinner together. Maybe I can pay the dinner in Apple stock, tokenized Apple stock. Or I can use Apple stock tokenized, going park on some DeFi projects as a collateral, and I borrow some money, which doesn't exist in traditional market, which I think RWA can be a very interesting aspect adding on to it. Last part is, as John mentioned, the most exciting part for me is something illiquid at the moment, or something that is very hard to put the price tag on because it's liquid, such as IP. And everything we see on IP is you can't put the price tag because there's no market for it. Or real estate, art, and those kind of collectible business. I think also if we can build some strong, robust price discovery mechanism with some regulation around it, I think there is going to be exciting RWA space market people going to enjoy and have fun with.
Well, oftentimes I say, the mission of our company is to create real-world impacts, throughout real-world assets on the top of the real-world services. And actually, as I said briefly before, we do believe, there are a lot of the huge potentials related to credit, private credits, receivable or loans and debts to small size of merchants. And I do think, the tokenizing or making those the receivable through RWA can be a big thing we can see in developing countries, or to make a little bit better for the rest of the world.
Great. And just final question, putting back my investor hat on and also working with entrepreneurs. Steve, where do you see the investable opportunities from a VC perspective? Like, what's your approach towards RWA platforms or marketplaces or specific asset classes? And then how do you help sort of entrepreneurs think about it? And would love John's perspective too, and John's perspective.
Frankly speaking, even though RWA is one of 8 subsectors that we promised our LP that we're going to focusing on, we haven't invested any of yet. Means that we don't, honestly speaking, there is not many investment opportunities for last 1 year in RWA, even though we are very bullish on RWA space.
I would beg to differ, my friend.
Yeah. So, but I think for last 2 months, the specific sector in RWA we got very excited about, which is the intersection between IP and DeFi. Some people call it IP-Fi, but we are very excited because in crypto space, back in 2021, as you know, there's some crypto gaming boom with the Axie Infinity play to earn kind of thing, and before the DeFi summer. I think of one fundamental thing that we as early stage investors always trying to evaluate is whether this product and service they're building, whether users outside of Web3, are they going to enjoy it? There's a lot of a part that there's use cases lacking because there are a lot of service and product we are building. It's not attractive to normal users out there. So with that, there are many, some projects and teams are working on tokenized IP, and then it makes it tradable. So actually, though, we haven't announced yet, but we're gonna find a stage we might actually invest on certain the companies working on this IP/DeFi, so that you can trade your IP tokenized as a little bit of financial touch with it. I strongly believe that DeFi is gonna be very strong driver for next couple of months, which is a little bit neglected for last 1 year because of FTX issues. So again, my answer to you is we are very bullish on how this IP assets can be on chain, and we are going to deploy actively into this space, making this IP tradable.
So I was obviously joking a little bit with Steve that there weren't investable RWA opportunities this year. If you look at the performance of just any crypto token this year, outside of Bitcoin, the two best performing token asset classes have been meme coins and real world assets, primarily driven by Mantra. But I do think if you take that aside, we talked about this as well backstage. There are going to be this space is going to have a few consolidated winners, more so than others. And the reason for that is it is extremely challenging. The network effect becomes massive, and honestly, licensing and compliance becomes a big moat. And again, I just don't really see a lot of projects looking at that space right now, at least on anything other than the tokenization platform level. Within tokenization platforms themselves, I think you've seen some clear winners starting to emerge. Securitize in the US, they have almost a monopoly at this stage. You have Libre Capital here, which I think is doing some really interesting stuff. So that's backed by Brevin and Laser, and we work very closely with them as well. So very jurisdictionally focused. And then outside of that, I actually agree IP is a very interesting one as well. Story Protocol, another one that's tokenizing IP. We're looking to do some stuff with them as well. Very interesting. I'm not just shilling my own bags, by the way. These are actually all really interesting projects. But outside of that, it is challenging because, again, a lot of the early stage opportunities aren't there yet. And when we actually start to see secondary markets start emerging, I think that's where we'll see some interesting stuff. But that is a little bit further down the line. So, secondary market opportunities, and also DeFi, RWA DeFi Legos, I think is another interesting area.
Thank you so much for your insights. You have three amazing specialists here who have shared their views of the future, and I want to invite everyone to think boldly about this space. I know that we always say we are early, but we are. And you will see that this is a 30-year process of transforming financial services and commerce and putting everything on chain and in making it more efficient, more liquid, more available to the investor public, but also the individuals. And make it more democratic. So I think there's exciting things that we're going to see ahead of us. And with that, I want to thank our panelists and the audience. And if you have any questions, we'll take them after this panel because I think we're running out of time. Thank you so much.
Thank you very much.